Hi everyone, I'm Larry Connors. I want to welcome you to this presentation. I'm going to be covering programming in Python for traders. I'm going to cover pretty much background on Python as it pertains to trading. We'll talk about ways that Python can potentially help improve your trading and also go over everything that's in the class. I'll also be able to take question and answers. Chris is also here available to answer any questions that will be given. So before we get going here, I just want to do a quick audio check. I want to make sure everyone's good and can hear me. So could you please type in the Q&A box, if you could type in a Y or a yes. Just want to make sure the audio is good on your side. Okay, good. Thank you. So as we get going here, everything that we're going to be looking at today, it's based upon simulated test results, not based upon actual trades, and there's no guarantees future returns. I'd like to again welcome everybody. A couple of quick questions here. Who here already programs in Python? Could you type in a Y or a yes if you program in Python? Okay, good. Okay, and Danielle, on your side on the Q&A, sometimes they're coming in and sometimes it's not. So good, thank you for answering that. And Danielle, if you could do something on your side just so I can see all the answers. Trade Station, who here programs in Trade Station? Could you type in a Y or a yes if you program in Trade Station? Okay, good. Good, good. Long time ago. Okay, thanks, Will. So looks like small handful. Thank you. Who here programs in Amibroker? Probably a handful. Is there a bunch of yeses coming up? Yes, yes, yes. See one big, large yes. Yeah. Okay, great. Thank you, everyone. And this is who this class is really, especially pertains to. Who here doesn't program yet, but would like to learn how to program? Could you type in a Y or a yes for that? All right, I see a handful of yeses. Okay, good. All right, thank you. So just to let everybody know, we give this presentation on Tuesday. There were a number of people there, and what was interesting is this class is intended for people that are looking that are already trading but are at the beginning level of Python. Okay, so you may be already programming in another language, you may be not programming at all in any language. But the most important thing is that this is a beginner's class in Python. We actually had some people who attended the class on Tuesday, or attended the presentation on Tuesday, and they had masters in science, had masters in computer science. It was interesting to see them there, but this class is not directed. If you have a master's in computer science, this is potentially too basic for you. Okay, so what we really want to focus on is making sure that, again, if you already have some programming knowledge, that's good. But if you have no knowledge whatsoever, that's also good, because we're taking this class with the assumption, or we're bringing this class with the assumption that you have no programming skills whatsoever. We're going to treat everybody from right from the beginning and have you up and running in Python within a couple of weeks. Okay, is everybody good with this? If you could just type in a Y or yes, just want to make sure everyone's good. Okay, great. See a whole bunch of yeses. Excellent. Thank you for that. All right, so the objective of the webinar is to share with you why Python has become the hottest programming language on Wall Street. It's now being used by the biggest and the best quantitative trading firms in the world. We're also going to teach you the benefits of Python and how it can make you a more successful trader and allow you to build better trading strategies. So why Python is the programming language of choice by many of the biggest and best trading firms in the world. And this is what, if you're not programming in Python, this is what you're missing, because this is what the rest of the world on the professional side is doing. Okay, so the best trading firms in the world have the resources and they have the capabilities. They can program in any language that they want. They also have the ability to hire the best and smartest traders in the world. And when you look at who they're hiring, and I'm going to share this with you in a second here, when you look at who they're hiring, there's one major theme. They're hiring traders with Python programming skills. So what we did is went on the boards, on the job boards that were out there, and did a recent search. I'm going to show that to you. And here are just a few of the top firms who have job searches going in. And as you'll see, they're now all requiring their traders. So it's the traders, the researchers, other people that are involved in it, but especially the traders, they're requiring them to program in Python. And the reason why they're doing this, it's obviously they believe that Python is leading to greater trading profits for the traders and for the firms. Okay, so does that make sense to everybody? I mean, obviously there's only one objective there, what they're looking to do. They're looking to make money, and they believe that Python is getting their traders to be able to do that. Okay, and we can see this now across the board. So let's look at some of these firms. Let's start with AQR. So AQR is a really wonderful success story. They are now the second largest hedge fund in the world. And Cliff Asness is CEO and founder of AQR. They've been around for a couple of decades now. And they are the leaders, one of the leaders out there in quant trading. It built their entire business around this. And when you take a look again, that they have the things, here's a job search that they have going for a risk research associate there in their Greenwich, Connecticut office. And the requirements, what you'll bring, proficiency in programming. And as you can see, Python preferred. We'll go to the next slide here. Citadel. Citadel is, I believe, the largest market maker in the world. They also run a hedge fund. Ken Griffin is one of the wealthiest men in the world. In fact, he just purchased the most expensive piece of real estate in the history of the country. He did it here in New York City. This position is for a global fixed income trader. And skill sets required: advanced proficiency in Excel and experience with programming and scripting language in Python and R. My guess is that they had the choice. They would prefer that individual who gets this job is doing it in Python. R has its limitations versus Python. Python is more robust. Okay, so they're looking also. Need to have, in order to become a fixed income trader on the global fixed income desk, you need to have proficiency both in Excel and also in Python. Morgan Stanley, quantitative investment strategies research, responsibilities, primary track record, and they're looking at MATLAB, R, Python, C++, a comparable programming language to solve complex problems. So they're taking it up to an even more advanced level. We go to the next one, Tudor, Paul Tudor Jones, one of the famous hedge fund managers out there, multi-decade firm. There's a position here in New York City for quantitative analysts, skills required, Python programming skills with Pandas. Pandas is the library inside of Python. You'll learn that in the first class. But as you can see, the most important thing is that they're requiring them to have skills in Python. Go to another big firm. This is Millennium. Izzy Englander is the founder of Millennium. Millennium is a multi-billion-dollar hedge fund. It's a multi-strategy fund, and what they are doing here in this position here, this is for a quant developer in the stat arb department. As you can see there, startup skills. So these are higher level skills for, at least for this position. Qualification skills required, graduate level in a quantitative field, so CFA, FRM, or CQF is a plus. 10 years of professional experience. And what are they looking for? The proficiency in at least one data science stack, Python, R, and Spark. And again, without completely knowing, my guess is if you asked me if you said which one would they prefer, they'd likely prefer Python. Okay. Point72, another firm over there. So Point72 is Stevie Cohen's firm. What Point72 ended up doing is back in a number of years ago, they quietly built a quant firm behind the scenes. Basically, did it did it internally. I know some of the people, or especially one of the people who helped lead that development that was done over there. And what they were doing is basically they built out now an entire quant firm within their firm. Money has been allocated to there. They raised a few $1 billion there to be able to do that. So this is a position. It's a nice position. Senior researcher and trader, desirable candidate. You see the type of experience that they're looking here. So it's working U.S. equities intraday, creating short-term forecasts less than 3 hours, then successfully deployed in production, creating multi-day forecasts. So there's basically short-term forecasts there that were successfully implemented, experience with intraday event-based forecasts, and then the primary conduct research using primarily conduct research using Python, capable of creating their own specific research tools as needed. Okay, so what we've just seen here is that some of the biggest and best quant trading firms, what are they doing? They want their traders programming in Python. Is everyone good with this? If you could please type in a Y or yes, all good with this, and all in agreement here that this is where it's good. All good? Okay, thank you for that. This is an article that supports it even further. This is a gentleman I have a great deal of respect for. I recommended his book there, Systematic Trading, in one of my books. Rob Carver is the former head of fixed income trading at AHL. AHL is a multi-billion-dollar quantitative hedge fund. Rob does really some phenomenal work that's out there, and this book is the book that I recommended in my book. Rob's one of the pioneers out there, and again, managing a lot of money there through their fixed income trading side of their business. And as he stated in this article, the article was the best coding language to learn for traders in banks, hedge funds, and high-frequency trading firms. Python is the preferred language of many quantitative traders because of the extensive availability of the packages for data analysis. So if you're like most of us who really rely upon data and really rely upon data to make our trading decisions, as you see over there, someone like Rob Carver saying that Python is the preferred language used for quantitative traders, okay? So we can show you dozens of these examples, and there's now tens of thousands of professionals at the top trading firms around the world that do their programming in Python. So they're not doing their programming in retail products like Trade Station and Amibroker, etc. And this is to take nothing away from Trade Station. This is taking nothing away from Amibroker. They're fine packages there. But if you're serious about your trading and you want to join the elite trading professionals around the world and not, a number of retail traders, then learning Python is a must. If you're not, you're falling behind. Okay. So briefly, I'll tell you real briefly our story, Chris and my story that's behind this. So Chris and I were a generation apart in age, and also well, I'll leave it at that. We're a generation apart in age, but our journey through programming has been basically the same. So Amibroker and Excel have been very good to me. My clients for here, many of you here, probably might have gotten onto Amibroker likely because of us. We were one of the early movers there on the trading side with Amibroker and combining it there with Excel. So it's been very, very good to us. For Chris, Trade Station was good for Chris for years, but we both realized that in order to keep up with the rest of the world, meaning the professional quant firms, what we needed to do was move to an open source, professionally used language. And that language, as so many other quant firms have found, is Python. Okay. So here's why many of the top firms use Python, and these are the reasons why you should be doing it too. Okay, so number one, it's easy to learn. Okay, so there's many reasons here, but number one, Python is easy to learn. You can learn how to program Python, and this is now pertaining to Python for traders. I want to really differentiate between Python and all the many other industries that Python could be used for. So there's general classes that can be taken out there, and they can be very advanced level classes. We want to focus on Python for trading. That's our main focus here, okay? So when we focus it just for trading, it is easy to learn. You can learn how to program Python in under 10 hours. So in 10 hours, you'll be able to do in-depth research, code more complicated trading strategies, and analyze your back-tested results better and faster than ever before. And I'm going to show this to you when we walk through what a week-by-week looks like for the 5 weeks of this class. Number two, it's faster than most languages. You'll spend less time writing your code, which leads you to having more time analyzing your results and improving your strategies. Number three, and this is very important, and this is why I love Python, it's open source. This means you'll have access to the same trading code and tools created by many of the best researchers, programmers, and traders in the world. There's a global community available 24/7 to answer any questions you may have. So Python is widely used, it's well documented, it makes solving coding issues a breeze. So if you're stuck on a coding problem, there are many people out there to be able to help you. And in fact, you can even do a quick Google search, and usually you'll get your answer will pop up there right there. You'll get the answer to your question right there in Google. Number four, Python has the best libraries for data analysis and quantitative trading. This is why you see so many of these top trading firms from around the world why they use Python. And what this means, again, is that you're going to be using the same tools as the professional quant trading desks and hedge fund managers do. This can't be said for other languages like Trade Station and Amibroker. And what this means is that you'll find edges in the market faster and more efficiently than ever before. So this is how to program with the same tools as the best quantitative trading firms. So if you're interested in joining what is now the ranks of the best quantitative trading firms in the world, and this includes the multi-billion-dollar trading firms like we just looked at, Tudor Investments, Point72, Millennium, Citadel, and hundreds of other professional trading firms, we're offering a proprietary 10-hour programming in Python for traders, and the course is going to begin on Tuesday, March 12th. What I'm going to do here is I'm going to share with you what the class outline here is, so you'll be able to see week by week what you're going to learn. You'll be given homework assignments each week to be able to make sure that it gets reinforced what you've been taught over there. Plus, you're going to have access. Chris is going to be coding throughout the class. Chris is going to be providing his code to everyone in the class, so you'll be able to take Chris's code, use it as you like, but you'll also be able to match up your own code here. So on week number 1, you'll gain the foundation in order to do your backtesting, research, and signal generation. And this foundation will lay the groundwork for you to scale into the upcoming weeks. So your homework for the week will include learning how to do doing technical analysis calculations in Python. And that includes much of the technical analysis that most of us use. So things like moving averages, RSI, and the other major technical indicators used by professionals. Week number 1 is the foundation, and then we build from there. Week number 2, you're actually going to be backtesting in Python, okay? What you're going to be doing is you're going to be writing code in Python and testing strategies and signals to find market edges. So for example, again, we're going to take something very basic here. So for example, what you'll be able to do is you'll be writing code using a 2-period RSI or a 3-period RSI or 4-period RSI. You can use all the RSIs, it's up to yourself. And you can do it on various levels. So you're going to get to see the test results at an RSI below 30. What does it look like with an RSI below 20? What that means is that by the end of week 2, you're going to be able to test various market conditions. So for example, overbought and oversold market conditions, and calculate the historical edges that exist in those conditions. So that's where you'll be in week number 2. Week number 3, this is when you're going to be writing full-fledged trading strategies. And this includes allocating capital to trades, adding risk management tools, and analyzing portfolio returns. So at the end of week number 3, you'll be able to run more advanced back tests on your trading ideas and strategies. Then we'll move to week number 4, and this is we go even deeper using Python. Week number 4, what you'll be doing is you're going to learn how to, and this is what you will be doing, you'll be analyzing your back tests. This includes analyzing your cumulative returns, analyzing your risk. That includes drawdown, volatility, etc. Going to be able to analyze correlations through time, and we're going to do a deep dive into analyzing individual signals in order for you to see when and how to best optimize your trading strategies. And then in week number 5, you'll be writing more advanced back tests, and this includes creating signal list generation, so you'll be able to get the signals from the strategies that you created. You're going to be learning how to manage a portfolio of multiple securities. You'll also learn advanced concepts on position sizing in order for you to optimize the edges you're finding in your strategies. So by the end of this course, you'll have the ability to find your own market edges, build your back test, and do a deep analysis of test results. Is everybody good with this? If you please type in a wire yes if you're good with this. Okay, great. A lot of yeses. This is great. Thank you. Thank you, everyone. And I see some questions going to come in. I'm going to answer the questions when we wrap up here after we get through this. So for those of you who I see some people have asked some questions, I will get those questions answered for you. But again, thank you, everyone. It's good to see that we're all together here. So here is what you'll receive. This is all the coursework. So the Programming in Python for Traders course, it's going to run for 5 weeks. We're going to meet online as a class every Tuesday night from 4:30 to 6:30 p.m. Chris is going to be leading that class, and I'm going to tell you a little bit more about Chris here in a minute. So the class will run for 2 hours every Tuesday for 5 consecutive weeks, 4:30 to 6:30 Eastern time. If you cannot attend a class, every class is going to be recorded, and you'll be able to watch the class for as many times as you like. Number 3, After each session, you're going to be given a homework assignment to complete, and these assignments will guarantee that you're successfully programming and trading strategies in Python. So what's going to happen is as each week passes, your Python programming skills will improve. And as we just saw, by the end of week 3, you'll be writing full-fledged trading strategies in Python. And by week 5, you'll be programming and analyzing advanced strategies in Python. Number 4, you're going to have free access to a large professional database that's offered by Quantopian. Okay, so Quantopian is one of the largest resources in the world for quantitative trading strategy development, and their database is available for you to put their data and build your trading strategies. We're going to be programming in Quantopian together throughout the class, and what that means is you're going to be programming along with Chris, gaining hands-on experience. In our opinion, this is a better and smarter way for you to be able to program. Even though we're going, and just to let you know, even though we're going to be doing the class on Quantopian, there are other platforms out there that you can do your backtesting on. Chris will share what those other programs are. The main thing is that you have the language, meaning you know how to code in Python. You can then move that knowledge into any platform that's out there. For this class, though, I'm a big fan of Quantopian. I like the work that they've done. There's a lot of smart people that are not only behind Quantopian, but there's a lot of smart money that supported Quantopian, meaning on the institutional trading level, in the institutional trading world. So Quantopian is it's a database of choice. We will program there, but again, you can take the skills that you learn in this class and move it onto any other platform out there, trading platform, as it pertains, because you have Python. Number 5, as each week progresses, you'll receive all of Chris's code written for the class. So Chris is going to be writing code as he's teaching. He's going to be writing code. As he does it each week, you will have access to his code. And what Chris is also going to do, and this is an added bonus throughout the courses, Chris is going to be supplying you with pre-written trading strategy scripts that in code that you can apply immediately and customize to your liking. So a lot of those strategies will be, for example, mean reversion strategies. There'll be some trend following strategies, some momentum strategies. Chris is going to write all the code there. And then what you'll be able to do is you can take Chris's code and also then you're going to learn how to customize it to your liking, to allow it to fit best into your trading. This is a nice bonus to be able to do there. But again, as each week progresses, Chris is going to provide you for the code that he wrote during the class. Okay. Number 6, what we're also doing, and we've done this in our Swing Trading College, this has been successful. We're going to continue to do this. There'll be a private Facebook group for this class only to interact with. Chris will be in the group daily to answer any and all of your Python programming questions, providing you with ongoing instruction each day in order to assure you your growth and success. So if you get stuck there anywhere along the way, you're going to be learning and be doing it. But if you have a question or you want to go a little bit ahead and you want to be able to do that, you can post your question up in the Facebook group. Chris will be there daily to be able to answer your questions. So you're going to continue to grow and grow and grow. Number 7, we're going to be coding real trading strategies together in the class as examples. Number 8, after graduating, you're going to receive a certificate of completion in programming in Python for traders. And number 9, this is the only Python for traders course that we know of that's available in the world that has a combination of live classes and unlimited access to the recordings and class materials. It provides you with weekly homework assignments, it's full-time support through our Facebook group, codes for trading strategies. You're going to code trading strategies together in class. And also, we guarantee your success by offering you a full money back guarantee. And I'll talk about what that looks like here in a minute. So here are the 7 reasons to take programming in Python for traders. This is 7 reasons to take this class. Number 1 reason why the major quant trading firms require traders to know Python is because it makes them smarter. And obviously, they feel it makes them better traders. And it will do the same for you. Number 2, Python is obviously more professional. As you know, the best trading firms in the world, they don't program in Amibroker. They don't program in Trade Station. They program in Python. And by learning the program in Python, you'll be joining the elite trading firms. The objective of this course is in 5 weeks to move you out of the closed source retail world, okay, and then move you into the open source professional trading world. Is everyone good with number 2 here? Again, with this objective. Is everyone good with this? Can you please type in a Y or a yes? Okay, great. Excellent. A lot of yeses. Thank you, everyone. Number 3, it's open source, which means you'll have the opportunity to interact with many of the best trading programmers and researchers from around the world. Number 4, Python for trading is growing, and it's on the cutting edge of quant finance. You're going to join the largest quant finance community in the world, and this community continues to grow even stronger at a very rapid pace. What's also nice is that there's continuously new tools that are created out there for Python as it pertains to trading. So as these new tools are developed, you'll have immediate access to these new tools to further improve your trading. Number 5, you're going to gain access to one of the largest databases available for traders for free. So Quantopian's data, it's clean data, it's used by many professionals, and this includes This data includes technical analysis data. You'll have access to fundamental data. There's sentiment data. There's social media data there. There's economic data, and there's continuous futures data. Okay. By the end of this course, you'll know how to take this data and build trading strategies around this. There's a nice plus. And joining Quantopian, by the way, is free. There is no cost for that. Number 6, you're going to have live interaction with Chris Kane, and this is important. Chris has over a decade of professional trading desk experience. He managed a trading book of over $400 million. Chris now manages his own money full-time, and he built his strategies in Python. And this is your opportunity to learn directly from one of the authorities on programming successful trading strategies in Python. So use this example. There's a class out there that was brought to my attention. So there's a class out there that is it has hundreds, if not thousands, of people that will take it. And it basically they title it Python. It's not for traders, but it's Python for financial markets. And the teacher of the course went in and along the way gave a trading strategy there. Along the way, basically created a trading strategy. Number 1, he used Bollinger Bands, but it was a mishmash of things that made absolutely no sense. And he went on to say, he said, I don't trade. I'm not a trader. So I don't even know if this makes sense. I just want to teach you how to use Python. So he wasn't even a trader teaching this class. You have the peace of mind of knowing that not only is Chris a professional trader, Chris has professional trading desk experience. It's 10 years of experience. His desk, he was responsible for over $400 million there, and now he manages his own money, having built his strategies in Python. Again, this is your opportunity to learn directly from a trader who uses Python and can be able to answer all your questions, especially as it pertains to trading. And this is our guarantee number 7. If you're not successfully programming strategies in Python by the end of week 3, we'll provide you with a 100% money back guarantee. So that's how sure we are that you'll be joining the ranks of the many tens of thousands of professional quant traders who program the strategies in Python. Okay. So if you'd like to register for the class, this is how you can do so. The price for the Programming in Python for Traders course is $1,995. This includes 5 live sessions, all the class materials, the recordings for the class for you to watch and learn from as many times, and also all of Chris's code that's being done there along the way in the class. And on top of that, the additional strategies that he's going to be programming that you'll gain access to. We have an early bird special pricing, and this is what we often do. So if you sign up by March 1st is tomorrow, you'll receive the course, be able to get in the course for $995. So that's $1,000 savings. So if you're going to do this, take advantage of that savings. You'll also receive access to Chris's course, all the class materials, the recordings, Chris's code from throughout the class, as well as entry into the private Facebook group that we're having. First class is going to begin on Tuesday, March 12th at 4:30 p.m. And again, all the classes are recorded for you to watch as many times as you like. So if you'd like to register for the class, this is how you can do so. You can call this toll-free number right there, and Tim will answer and be able to take you and register you for the class. You could do so by registering online. You could do it right now. If you click that link right there, that will take you directly to the sign-up page, and you'll be in the class. And if you're going to do so, take advantage of the early bird pricing. It makes sense. So do that today. Latest by tomorrow, you'll receive $1,000 in savings. Class is $995. Okay. So if you first question, has this been good for everybody? Hopefully this has been good. Can you type in a Y or yes? Because I do want to answer. And if you have any questions here, I do want to answer those questions here along the way. So let me, I'm scrolling up here. Thank you for all the yeses. That's great. Thank you, everyone. Let me see. So just responding to the lack of open source, but Ches, I'm not, Ches is asking a question about what serious languages would you suggest avoiding due to the lack of open, so Ches, as far as this is the beauty of open source programs. So again, taking nothing away from Trade Station and Amibroker, those are not open source languages. Okay, so the question is open source versus closed source. Open source language being Python, you get a chance to basically, open source means you get a chance to basically see, you'll see the code that's out there for many others. Obviously, new tools that are out there for many others. There are many other people that will be able to answer questions for you and do things. I mean, that's the beauty of open source programming. And this is why we're moving, and this is why so many of these firms have moved over to Python, is the fact that it is open source. So again, I'm not saying avoid Amibroker and avoid Trade Station. I'm saying that in order to keep up with the rest of the world on the professional trading side, it really should be done in an open source language. Python is a language to do that with. So Chaz, let me know if that answers your question. Let me ask any things. Another question address data quality and how to right. So where the data quality is a really good question. So let me address that. Quantopian's data is clean. Okay, Quantopian is considered to be clean data, and so there's a lot of sources out there. I won't name the sources. I'm smiling, isn't it? I'm not going to name the many sources out there where the integrity of the data may be not so great. It's recognized that Quantopian has one of the cleaner data sources over there. Quantopian's data is being fed by some of the professional data providers that are out there, so we're comfortable, very comfortable, and it's not only us. This Quantopian has tens of thousands of traders on that platform, so that data is covered over there. Okay. So thank you for that question. Let me go to the next one. Neil asked a question, can you connect to brokers to do, or you have to translate Trade Station or something else? So Neil, you can connect, for example, Python with Amibroker. So when you're done with this class, we may potentially do advanced classes beyond that, and that would include automation. Once you have the base in place, though, for example, with Python, it can be automated. And then once it's automated, I do know, for example, because I use Interactive Brokers myself. We've been on their platform for many, many years. Interactive Brokers can be automated. Whether it can be done through Trade Station, it may require some sort of merge between your own code and then Trade Station's code. You'd have to ask Trade Station that. But if not, I do know for sure that at Interactive Brokers, you can take Python and you can automate that. Okay? So, Neil, let me know if that answers your question there. Okay. Let me see. So there's another question here. Are there strategies on daily bars? This is the beauty behind this. It doesn't matter whether the strategies are programmed intraday, daily, weekly. It's all going to be taught. So Chris is going to show primarily strategies on daily bars, but it can be easily converted into intraday bars. That's beauty. Once you understand how to do it on the basics of Python, you'll be able to do intraday programming. Certainly before the class is ended, and you'll likely be able to do it on an intraday basis, but to a marginal basis by week 2, and then by week 3, you should certainly be able to be doing that. Okay, so let me know if that answers your question there. Henry has a question. Will I be able to create RSI2 limit strategy on S&P 500 stocks at the end of the course? Okay, so I'm going to read Henry's question here. Will I be able to create RSI2 limit strategy on the S&P stocks by the end of the course? Okay, so Henry, there's two parts to that. The answer is, will you be able to create an RSI2 limit strategy? Yes, by the end of the course, yes. There's a good chance you'll be able to do it before the end of week 4. Okay, certainly you'll know it on week 5. So the answer to that is yes. Let me just address something on Quantopian. Quantopian does not provide index data, so they do not have the S&P 500. What they do is the replacement for it And a lot of people like this as a replacement. They have something called the Q500. And what they do is every 30 days, what they look at is they look at the 500 most tradable stocks that are out there, and then have a handful of requirements. It does a very very good job of either the large correlation. It overlaps as a large overlap with the S&P 500 stocks. The added advantage there, and this is not an options trading class, but for those of you who are trading, for example, options, that Q500 list is probably a better list than the S&P 500 stocks for trading options. There's a lot of stocks in the S&P 500 that have options that just can't be traded. They're just not liquid. When you look at the Q500 list, which is proprietary to Quantopian uses, that list tends to have more liquid options. There's a number of advantages over there. And in some of the conversations that we've had with other people, it's the pushback is why would you trade the S&P 500 when you could be trading the Q500? There's a lot of professionals that feel that way. So Henry, ultimately you can merge your own S&P 500 list. You can create your own list and do it from there. But with that being said, the more important part is, can you take a strategy using a 2-period RSI and provide a limit order in there, and then be able to do the entries? And I'll also add in the exit to it. Yes, absolutely. This is what this class is about. Okay. So Henry, let me know if that answers your question. Chaz, as far as the Quantopian data questions that you're asking here, you could just go right up to Quantopian. They'll be able to answer it even deeper than I can. You're asking a lot of questions that it pertains to their data, and they know their data. I know their data, but they know the data even better. And go right onto their website. It's a good website, and I'll let you see what they offer there. All right. So Henry, you asked how long Chris has been programming and programming. Python's been programming for a number of years, and programming in Python for 2 years. He basically moved his entire trading business moved it over from Trade Station, and in order to enhance his trading strategies and do things into a more scalable basis, in order to build out his own trading business, he moved everything over to Python. So he did that a few years ago, and so he has deep knowledge in there. And Henry, we have a relationship. You know the people that trading markets and myself have associated with. I try to associate with some, the best in the industry. Chris is a professional at this. Okay, so Henry, let me know if that answers your question. Thank you for that. Question here over there. Neb, if you can email me that question, I'm going to have Chris answer that to you directly, okay? Because Chris would know that answer to that. So Neb, my email address is lconnors@cg3.com. Send me the email, I'll forward it to Chris, and Chris will probably answer you back directly, okay? Thank you for that, Neb. Bert, I currently use Amibroker, mostly use Fast Track data. Fast Track provides very clean mutual fund data. That's good to hear, Bert. Thank you for that. Another question, your program support multiple instruments as I understand it as well. The answer to that is yes. So if you talk about instruments, it's stocks, it's ETFs. Quantopian has continuous futures data. There's you can use, that's the beauty behind with Python. Python is there for data. So if you have data, you'll be able to if you have data in any instrument, you'll be able to do the testing. You'll be able to use Python to be able to do that. And that's where everyone's going to be before they graduate the class. They're all going to be able to take any data set that's out there as it pertains to trading and be able to drop it in. Okay. Then thank you for that question. Adam, you're next. Can it be used directly with TD Ameritrade? Adam, I'm not sure about that. You probably want to do a reach out to TD Ameritrade and Thinkorswim platform and ask them if it supports it again. I know Interactive Brokers, so it can go directly. But with that being said, here's the thing, and this is for everybody. You can do your programming and backtesting here. You can do your programming and your backtesting in Python, and you can do your trade execution through any platform, okay? So kind of view it that you have your research in one location, okay? And let's say that research is going to reside, obviously going to reside with yourself. You'll do it through Quantopian, but you'll be able to write your strategy there. You have a trading idea, or you've seen research, or you want to be able to backtest some things. You're going to have the knowledge to be able to do that. And then on the trade execution side, like for an interactive brokers basis, you could automate it to do the trade execution, but you don't need to do that automation. You just do the actual trade execution in any platform, whether it's interactive brokers, Trade Station, Thinkorswim. You don't need to change brokers to be able to do this. This is really, view this as this is your research platform and your ability to be able to do back testing on a professional level, using it, using the same tools that many of the best quant firms in the world are using. So Adam, thank you for that. Let me know if that answers your question. And I'm going to go back. There was another question asking about daily data and tick data range. Quantopian provides data all the way from the monthly frequency all the way down to minute frequency. So for those of you who are looking for intraday data, I've just been told by Chris that Quantopian does have intraday data. I thought they did, but it's good to have it. And Chris is going to cover that as part of the class. Okay. So let me make sure I've got all the questions here. Will we get coding templates that we can easily add rules to? Yes, Henry. Absolutely yes. Those coding templates are going to be given right from class number 1. And I'm smiling as I'm saying this because I've seen some of the coding templates, and was able to interact with some of the coding templates, and that was great for me to see because it was that simple to be able to do. So yes, there will be coding templates. Everything that Chris codes throughout the class, you're going to be given there, okay? What Chris is also doing is Chris is going to be taking some of the mainstream strategies, for example, the Economist Research has provided. So these are the main reversion strategies and some of the other strategies that we provided, and we're going to be providing the coding templates that's there. Obviously, we want to get everybody to be programming on their own, but you'll have the peace of mind of knowing that the templates are all there. They're going to be provided to you on a weekly basis, okay? And again, right after class number 1, you're going to have some nice things there, especially if you're using RSI, 200-day moving average, etc. So Henry, let me know if that answers your question. Adam, you're welcome. Bert, I think I answered your question. Let me just make sure they have other questions here. It's another question. What is the expected level of programming of Python knowledge for this program? The expected knowledge for this class is none. If you have any type of programming skills, that's good. But we come into this class, we're teaching this class, and this is where Chris and I have spent a lot of hours of developing this class. We went there right from the beginning. We want to take people, we want to work with people with the assumption that they have zero programming skills, none whatsoever. This is day 1 in programming, and we're going to take them there and build it up on Python, okay? So hopefully that's clear with everyone. That's something that came up in the previous presentation. I just really want to make this clear. We go with the assumption that there is zero programming knowledge. If you do have some knowledge, for example, an Amibroker Trade Station, all the better. That's fine. But you're going to come in, everyone's going to come into this class from day 1, and you can see how on week 1 we're going to put the foundation in place, and week 2 we're going to already start on the strategy development. In week 3 you're going to be programming in those strategies. It just continues to build week after week. What you're also going to do is you're going to have homework assignments. You'll be able to share some of that knowledge up there on the Facebook group. Chris will be able to answer your questions, and you're also going to get the templates there to match up your code with Chris's code to make sure that everything is there. Okay, that was a great question, and thank you for that. That's good. And all these questions are great. Thank you, everyone. Emil, you asked a question, will the course address testing of multi-systems combining long and short systems? Chris, can you let me know if you're going to know that, or is that going to be covered in week 5, both on the long and short side, or are you going to wait for that on an advanced class using multiple systems together? So Emil, I'll get you an answer for that in a second there. Let me just see. Next question. So there's a question there. So what is the main upside of using Python versus AFL besides being a more professional standard? The upside is Python's more robust, Python's faster, Python is open source. The big thing, it's open source. I'm not sure what happens if Amibroker ever went away. I'm not sure what happens to the AFL code, but you don't need to worry about Python going away. It's used by tens of thousands of traders. It's used by probably potentially millions of programmers that are out there in all industries. So there's a big upside to moving from AFO code over to Python. It just there's many advantages to do this. So hopefully that answers your question. I just covered a handful of them, and given enough time, I could probably could list off a number of others. Right, Bert, you're welcome. Emil, the question is, will we be covering both long and short strategies in the combination? Yes, we'll be covering both long and short strategies, and then what you can do and combine them. So this is for everyone. If you have a portfolio that has long strategies and you also have short strategies, what you're going to be able to do is put those strategies together here in Python. Okay, you'll be able to program those strategies, put them together within a portfolio, and be able to see the historical results, get the backtested results. And then what you'll be able to do is you'll have the knowledge to be able to then optimize those strategies. You'll be able to see, okay, if I add something in, if I add some new data in, if I add some fundamental data, social media data that's out there, or add a different additional technical indicator, how does that impact my historical test results? You'll have all that there and be able to see it not only on an individual trade basis, but also see it on a portfolio basis, all the way up to, in this case, in a long short basis. Okay, so Emil, thank you for that question. Great question. And Chris, thank you for answering that. That's good. Pretty advanced stuff. Pretty cool. Okay, good. Thank you. Is everyone good with this? If you just type in a wire yes, I want to make sure I answered everyone's question. If I missed any questions here, feel free to email me. My email address is lconnors@cg3.com. I'll get you an answer. I'll look to get you an answer here within 24 hours, and certainly before so you can take advantage of the $1,000 savings there. All good. And the better pricing. Okay, good. Thank you, everyone. I appreciate you being part of this. A lot of great questions, and I look forward, if you decide to move ahead with this, I look forward. We're all going to be together beginning on March 12th. We'll be together for five weeks.